Ravi Jakhar, the Chief Strategy Officer at Allcargo, joins us now. Hi, Ravi. Thank you so much for making time and speaking with us. Well, you recently announced the acquisition of 30% stake coming in on the GATI Kintentsu Express JV as well from your Japanese partner. Could you talk to us about what will be the incremental revenue that comes out of it? What kind of, is it going to be EPS accretive? What's the rationale for this?
So pleasure being on your show. And this is in line with our earlier announced strategy of consolidating our position in the domestic supply chain. We have two businesses therein. One is contract logistics, wherein we had also announced acquiring the nearly 39% stake of our partners. And in the express business, where we had a joint venture with KWE, we had announced acquisition of the 30% stake from them. And that has been signed off yesterday by way of the share purchase agreement, which has been signed. And with this, we would increase our holding in the operating entity, which is GATI Kintentsu Express. And this has been in line with our agreement signed with our partners in the past, in 2016 and 2019 for the respective businesses. What this would allow us to do is, it would allow us to operate the businesses with greater strategic independence. And it will also allow us to drive synergies better between the two businesses, which is contract logistics and express logistics, which should benefit in increasing the revenue and also making the businesses more efficient individually. And as we've also shared earlier, we are also exploring schemes of restructuring by which we can potentially bring these businesses in a more synergistic way. And that's something which you should also be in a position to elaborate on in the coming couple of months. So this is a step in that direction.
Because, sir, that the Japanese ownership in GATI will go down eventually? I mean, are you working towards that final thought?
So the Japanese partners, KWE, they've been great partners for us, and now we have bought out their 30% stake. This was the partnership at the operating entity. So now it would be owned 30% by Allcargo directly and 70% by GATI. So Japanese partners would no longer be partners in the operating express business.
Keep both the entities separately listed, or eventually the roadmap is to merge them?
We know the principles we are working on. We want strategic independence for the businesses. We want financial flexibility, which means you want to eliminate holding structures. You want the businesses to be, synergistic businesses to sit together. We have appointed advisors and we are working with them. And now with this partner stake having been bought out, it allows us to move forward in our restructuring plans, and we would continue to work on that. And like I said, maybe another couple of months, we should be able to come out with a clear picture. But the principles remain very simple: make businesses strategically independent and create financial flexibility, remove our inefficiencies, and that's what our endeavor would be.
Really, for our viewers, Allcargo and GATI, two logistics business. Every business has a unique proposition. So let's define the unique proposition of GATI and unique proposition of Allcargo. There are benefits of synergies. That's why, of course, the thought of acquiring was there at the first stage. But if our viewers are watching the show, if they're investing in GATI, what is the unique business proposition and what is the USP of Allcargo?
Yeah, so as far as Allcargo is concerned, we are global market leaders in LCL consolidation, which is the niche ocean freight business. We are far ahead of competition on our digitization journey. The way we've been able to transform the company from a technology standpoint, using all the analytics to drive intelligence, optimizing network, our ability to service our customers through a unique global footprint. We operate with one enterprise system, which is very unique in our industry. So there are multiple competencies which put us significantly ahead. And therefore, in a very unique situation, I would say that each industry has a market leader and a tech disruptor. In our case, we are both the market leaders globally, and we are also the tech disruptors, changing the way industry operates on a global basis. So that's something which is a very unique value proposition which Allcargo brings in. And when I say Allcargo, I'm referring to our flagship international supply chain business. When it comes to the domestic supply chain business, we are the only company with significant scale in both express and contract logistics businesses. While there are players in both these independent businesses, our ability to service customers end-to-end for their inventory management as well as distribution requirements in the B2B space that we operate in is extremely unique. And within that, GATI has legacy strength of its network. And over the last couple of years, the way the business has been transformed from both financial, operational, and technology standpoint, we believe that the combined synergies which are present in the group would allow the business to be very differentiated in terms of what services we can offer to customers. So one common theme across both businesses, unique abilities to service customers for end-to-end requirements, which are significantly different from our competitors and peers.
Ravi, let's get back to the core business. And your earnings in Q3 were a tad bit tepid, of course, keeping up the entire discontinued operations adjustment. But the earnings were a bit tepid because the volumes were on the lower side. There was a bit of a decline as well. And you had hinted that next couple of quarters are going to be a bit sluggish with respect to the trade activity. What's the reading on the ground now?
I think we're living in very interesting times, and even as a company, we have to make short-term and the long-term strategy. On one hand, we are seeing a couple of quarters of sluggishness, and like we have said in the past as well, we have seen volumes declining from about October onwards last year until February. The good part is that March has seen a bounce back, and March indicates towards improved performance in the months to follow. So from a month perspective, I think March has been a month of recovery, and we see the trend to gradually continue and the international trade flows to improve. And from a quarterly perspective, naturally with January and February being weak, this quarter could remain subdued. But from April quarter onwards, we see momentum coming back in terms of the volumes. At the same time, we also need to be sure that we are focused on building capabilities in the long term. Because what's happening in the long term is, one, on the global basis, logistics is going through a massive transformation. The adoption of technology and digitization in logistics has not happened at this pace in last 20 years when banking, retail, several other industries got digitized. So with the paradigm shift in how logistics operates globally, we have a unique opportunity to be at the forefront of that revolution. And on the other hand, on the domestic side, we find that India, as it aspires for
Right.
the manufacturing-led growth, the whole opportunity at hand for us is to how do we kind of prepare ourselves to be a digitally run logistics company which enables economic growth in India and globally.
Sure, that's the long-term strategy. But just quickly to wrap up the conversation, given the fact we are seeing a bit of a bounce back, you're on track to achieve that guidance of 25-30,000 crore worth of revenue in FY25 with a margin profile, or FY24 rather, with a margin profile of 9 to 10%?
We have shared the guidance for 2026, and that guidance continues to remain what we have shared.
On that note, we'll let you go. Thank you so much, Ravi, for joining us with that quick take as to where the setup is with respect to the business and